Hope you're ready to learn. Good morning, afternoon, good evening, wherever you're at. Welcome back to the video, guys, and this is part 2 of our video series. So let's look over what we've looked at so far. By now, in the video series, you should have done 2 things. Number 1, you should have found out how you want to invest. And number 2, you should have picked a broker, signed up, and linked your bank account at this point. If you haven't done those things, please pause this video, go back to the first video, and then follow the instructions there. But if you have done those things, then let's get into this next step. Now that you have your account set up, we need to help you understand how to look at a stock and identify if it's right for you. So for this demonstration, I just picked any random finance website. There's a million of them out there. This is Yahoo's finance page. So if you choose another one, that's fine. Most of the data is going to be the same, and sometimes they're going to lay out the data to where it's very similar. So it's kind of like comparing apples to oranges. But looking at the data, let's kind of look over this, and I'll teach you how to kind of translate what you're looking at. I chose Apple for this because, yeah, why not? I invest in them heavily. I think I have over almost $80,000 in just Apple alone in my portfolio. So, yeah. But let's take a look here. So, Apple is currently trading at $390.22. It's going up and down so fast I can't keep up. But basically, this is an overview of what they're currently trading at. When you see a negative, this is the percent that they fell or risen within the day. Obviously, green is going to be better than red. So they must have started higher for the day, and they've went down since. The previous close is the end close value. So it's the value of the stock at the end of the trading day yesterday. So they actually ended yesterday at 393.43, and then they opened at 396.69 because there's after hours trading that can be done. So there was still trading happening after the stock market closed, and it looks like they almost got the 397, but then they opened the day today probably a couple bucks short. So there's that. Their market cap is how much money they're worth, or how much the company is worth. So in this case, Apple is worth $1.688 trillion. That's crazy. Just thinking about the word trillion, it just blows my mind. Yeah, it's such a big number, you know, and they're almost at 2. So they got a lot of money. The days range is the range that the lowest they've been at for the day, and the highest they've been at for the day. 52-week range is the lowest they've been at within the last calendar year. But when I say calendar year, I mean from like last, July to this July. It's not like from January till now. So within the last 52 weeks, they've been as low as 192. So if you got in at 192, I mean, you're making moolah right now. Lots and lots and lots and lots of money. Okay. Dividend and yield. So the dividend looks like 0.83% of each stock. So essentially right now, if you are with Apple, they're going to give you 328. And this is for the year. It's not for like each dividend payout. I think a lot of people think, oh, it's 0.83% every month or every quarter. No, it's just literally for the year. They'll pay you $3.20 per share. So if you have 100 shares, which would cost you a lot of money, like $38,000, you're making $300 a month off of that. So, I mean, it's not bad. I mean, there are definitely better dividend yielding stocks out there. Apple to me is more of a growth stock because, I mean, just look at this. I mean, over the course of a year, you've gained, it's ridiculous how much you gain. It's more than double. So that's the real value of Apple. This is what we want to take a look at. We want to take a look at the value, and overvalued is not a good thing. It means it could be in line for a correction. If you have a stock correction, the stock can just dump and it'll drop pretty fast. So, you got to be careful with overvalued stocks. Just kind of keep your eye on them. You definitely want this to be probably somewhere around here or even in the green to feel a little bit more comfortable. But we'll come back to that at another time. This is the current performance of the stock. What I like to do is I kind of like to, I mean, one day is great. even a 5-day work week, 1 month, 6 month, year to date. I like to look at the 5 year and just see if it's on a steady incline. If you see a stock where it's on a steady incline, that means they're profitable. If you have one where it's like up and down, all over the place, to me, it's not really a growth stock. It's not as profitable, but you can tell. I mean, look at Apple started back in the 80s, at 47 cents a share. So, and imagine if you paid, $4 back in the 80s at 100, you would have been sitting pretty right now, like 30 grand just off of $100. So definitely worth investing in these kinds of companies. These are their competitors. A lot of times you'll see competitors lined up on the pages, on the finance pages. Obviously, Google, Amazon, these tech companies are competitors of Apple. So yeah, there's that. Performance outlook is basically moderate, and then they're looking for high performance in the mid and long term. This is what you want. My investing strategy is to invest long term. So when I see stuff like this, I'm like, oh yeah, definitely going to invest, because I know in 10, 20 years, I'm going to have a ton of money and basically be able to retire early if I want. So this is what you want. You want long-term, you want mid-term. I don't believe in day trading. I don't like it. If you want to do it, great. I feel like it's a good way to lose your money if you're not careful. So you got to be very careful when it comes to that. All right, so these are their financials. Obviously, these are their the revenue and the earnings. So this is the revenue that they've made. These are the earnings that they've made off of the revenue. They have a recommendation. So I like to look at the recommendations because they're going to give you an idea of what you should do. These are the analysts that have looked at it, and they have a sell rating, underperform, hold, buy, and strong buy. Currently, they sit at a 2, so it's a buy. Analysts are basically saying, yeah, buy the stock right now. Don't pour all your money into it, but definitely invest into it because it's worth your money to do so. If you ever see a stock that is at hold will basically mean don't do anything with it. Keep an eye on it. Don't sell it. Don't buy any more. Just hold your position and wait for an update. Obviously, if it's sell or underperform, these are bad areas. Sell usually means that the company is having a lot of trouble. It's really hard to get a sell rating. I mean, it's really hard to get a sell rating. And if you have a majority of analysts saying sell, it's probably time to get rid of that stock, just to be on the safe side. Unless you're one of those people who likes to gamble and believes that one day that stock will turn it around and you'll be the guy who didn't sell and you'll be the millionaire. But that's a really rare thing. So definitely be careful with this. But yeah, if you see buy or strong buy, it's all in at that point. And that basically is it. I do like to look at the company profile as well a lot of the time, because it kind of gives me an idea what they do. Obviously, they're in tech, so right now especially tech is very important. So just keep that in mind as well. But I hope that this was a good demonstration of what you can see on this. And if you have any questions, feel free to put them in the comments, because I have no problem answering with the knowledge that I have. But yeah, that's basically how to read a stock. So now that you know how to read a stock, my next task for you is to go onto your broker, find a stock that you're interested in. It could be Apple even if you wanted to. But I want you to go into that stock. I want you to look at it and see if it's right for you. If it's something that you feel you want to invest in eventually, I want you to add it to your watch list in your broker. I like having a watch list because it lets me monitor different stocks that I haven't quite gotten to the point where I want to pull the trigger on them yet, but I can monitor them for the time that I do. Alright guys, I'm going to go ahead and wrap up the video here. By the next video, you should have a couple things checked off your list. You should be on your broker, have your bank account linked, and you should have a few stocks in your watch list after doing a little bit of research. Okay, so make sure you do that. Also, make sure that you like and subscribe to my channel and like this video, because I need help with that YouTube algorithm. Hit the little bell for notifications. I'm going to leave a link down in the description where you can sign up for the Robinhood app. They'll give you a free stock. It's great. You can recommend your friends after that, and it's wonderful. Until then, I will see you guys next time. Have a great day, and peace.